What's up guys, welcome back to my channel. It's me, David Hanlon, aka the Laptop Legend, and in this video today I want to talk about exactly what shorting is and exactly how to do it, because a lot of you guys have been asking me for a definitive video on how to short and basically on shorting. So this month, just to give you a little perspective, I have bias flipped and have been pretty much entirely short, and in the last couple of weeks I've made almost $25,000 pretty much exclusively shorting stocks. And this is a very valuable strategy to have, especially in a slower market, because it is easier to be a short because everything pretty much just fades off as soon as it spikes. So I'm gonna talk about some of the strategies that I use intraday to short, so that hopefully by the time you're done watching this video, you will be able to take advantage of some of these easy short patterns when you're struggling to make money on the long side, that is buying stocks. So in this video, I'm going to assume that you know absolutely nothing about shorting. So if you already do know, I'll try to put some time markers in so you can skip forward a little bit to the actual shorting strategies in case you already know what shorting is. So let's dive into actually what shorting is first, and then we'll get to what my actual strategies are. All right, so for those of you who do not know what shorting is, shorting a stock is pretty much the same thing as buying a stock. You want to do the exact same thing. The goal is to buy low and sell back at a higher price. Except the only difference is you sell first and then try to buy it back at a lower price. So you're doing the same thing. You're buying a stock and you're selling it. You just do it in reverse order. And to do that, you need to borrow shares from somebody else. So if you don't have shares, you need to borrow those shares from somebody else to sell them first. So you have a negative position in the stock. And in this way, you are able to profit from the downward movement of a stock. So say a stock is at $10 right now, and I think it's going down. I can sell that stock. I sell 100 shares short at $10. That is a $1,000 position, and I have negative 100 shares of that stock. That stock then drops to $9. I can then buy that stock back for $9. I take the difference, 9 times 100, okay, that's how much it costs to buy it back. 1,000 is what I made from selling it originally. I take the difference there, and I just profited $100 from this stock dropping. So it's pretty cool in a market where a lot of things are failing to break out, when a spike comes up and then it just dies back down. Because most of the time, if you sell into the top of a spike, the stock just comes back down and you can buy it back cheaper and you're able to profit. It's as if you knew the stock was gonna spike up before it actually spiked up. So instead of buying before stock spikes and selling into the spike, you see the spike already there, you sell at the top, and then you just buy back lower. Sounds pretty easy, right? Well, here's the thing. It is not quite that simple because there's a lot that goes into it, and shorting is by nature very, very dangerous if you are not disciplined. And the reason for that is mathematical. Now, you might not know this, but shorting, you can lose infinite money. You can lose infinite money, theoretically. When you go long on a stock, if I buy, let's go back to that same example. If there's a $10 stock and I buy 100 shares of it, that's $1,000. What is the worst case scenario? Well, that stock goes to zero, right? I put in $1,000 and it goes to zero and I just lost $1,000. That is the absolute worst case scenario. The world blows up, I just lost $1,000. Now, if I short a stock at $10, thinking it's going to drop to zero, and I want to make, I want to make $1,000, and then that stock goes to 20. Suddenly on a $1,000 position, I'm down $1,000. That's already a 100% loss. But now that $10 stock that was at $20, it just went to $30. Now I'm negative 200% on my $1,000 position. I invested $1,000, and I have already lost $2,000 on that $1,000 investment. If the stock goes to 100, I mean, you guys can do the math here, but it's absolutely terrifying what happens when you don't cut your losses. Because these things can literally go on forever. And there's some pretty crazy charts out there. I may pull up a few, but actually it's probably easier if you just look them up. I have a video called Reviewing the Best Supernova Stocks of the Last Decade or something like that. And in that video, I talk about some of these crazy movements from stocks. There's stocks that literally will go from $3 to $150 in one day. So if you short at $5, at $150, you're down. I can't even do that math in my head. I really can't. I mean, what is that? 3,000% in your position? Is that right? 3,000%? Can you imagine investing $100 and losing $3,000 in the market? That's pretty terrifying, guys. So this is why you need to be so disciplined when you're shorting. If you have a risk level and it breaks that, get out. Cover. Get out of the trade. And just so you know some terminology, covering is when you buy to cover the shares that you sold short. So to close out of a long position, that's where you buy and sell. You sell the stock. So if I bought a stock and I want to close out the long position, I sell it. If I shorted a stock, that means I sold the stock. If I short it and I want to get out of that position, I want to close it out, I cover. So I buy to cover. That's what it's called. And I just want you guys to know that terminology for later on. So basically, shorting, again, the goal is to do the exact same thing. You want to sell high and buy low. You're just doing the reverse order of what is typical when you're going long. So hopefully you guys understand this, and hopefully you also understand how absolutely terrifying shorting a stock can be if you become stubborn, because you can literally lose infinite money, and you can't be stubborn. So if you know that you're a stubborn person, it's probably better if you don't short. But it's also good to work on your discipline. Now, one other rule that I wanted to mention involves shorting penny stocks. It involves shorting penny stocks. So there is a rule that you have to have $2.50 of collateral in your account for every share of a stock that you are shorting, which means that if you're shorting a stock that is 10 cents, you're not going to be able to short very many shares of that stock because you need to have $2.50 of collateral for every one share of that stock. So if you have a 10,000 share position of a 10-cent stock, that's only a $1,000 position. But you need to have $25,000 in your account to be able to short those 10,000 shares. So it becomes a little difficult to make a lot of money from really cheap stocks, even if they spike a ridiculous amount. So like there's stocks that go from 0.002, RGBP for example, it goes from 0.002 and spikes all the way up to 8 cents. That's a 4,000% run that it did in like 3 days. Now you'd be thinking, man, that's gonna be an easy short. And it was. It was an easy short. But here's the thing. I couldn't short very many shares because it was only 8 cents. If it were, an $8 stock that had run up from 20 cents, from 20 cents to $8, that would have been a really easy short, and I could have shorted a lot of big size and made a ton of money on that drop. But, because it was an 8-cent stock, I couldn't really short that many shares. Short 10,000, short 20,000 shares. That's really not that many shares. When I go long, I buy 100,000. I buy 250,000, 500,000, a million shares. So just to give you guys an idea. So hopefully this intro helps you guys to understand what shorting is and all the important things about it. And now I want to dive into my computer and talk about some of the strategies that I use for shorting intraday specifically, because I am a day trader. There are some pretty good, I guess more swing swing trades for shorting. I never hold a short overnight because a stock can always gap up on some random news, and it's just never worth the risk for me when it's infinite risk. But there are some good shorting strategies, and I definitely recommend. I cannot speak. I definitely recommend checking out Tim Grattani. He has some really good shorting strategies if you are a little more patient and you can wait more long term. So let me dive in and talk about my personal shorting strategies that have made me like $25,000 in the last couple of weeks. All right, guys. So there's technically 3, but really 2 main strategies that I use when I'm shorting. So I just want to get into them a little bit. But what's funny about it is it's literally the exact same thing that I do while longing. It's just the reverse of that. So let me explain a little bit more so you guys can understand. So the first one that I want to talk about is shorting when there is a breakdown of a key support area. Now this is very similar to what I do when I'm going long and I'm buying a breakout of a key resistance level. So I pulled up this chart here. This is a NASDAQ, and I'm not a huge fan of trading NASDAQs because they are choppier. But you can see here, this resistance level, it held pretty darn well, man. It held pretty darn well. So you can see here, this was a high day, and it came back down, it bounced, and it failed at that exact same area. It could not break the previous high day. This stock could not. And finally, it came back up, and it was able to break that high a day, and it's holding above the high a day. This is a pretty good sign that you want to go long on a stock when it breaks the high a day and is able to hold it. Now, the same exact thing applies when you're trading to the short side. except instead of shorting when it breaks out, you want to short when it breaks down. So in this case, a good short would be if it breaks this key support level, or, it breaks this key support level right here. That would be a good short in my opinion. So let me give you guys an example of that. You can see here, let's see, what do I want to pull? I want to pull up RGBP, because this stock, I actually did this today. I actually did this. So you can see here, if I zoom in, it dipped it open, and then it just absolutely ripped off of that dip. And that was right at this 3-cent psychological area, right? Right at this 3-cent psychological area. And for those of you guys who are unaware, I do mention this a lot, but those psychological whole numbers are always better support and resistance levels because our mind is just naturally drawn to them. We want to buy at 3 cents even. We don't want to buy at 3.04 cents. No one wants to buy there. So typically speaking, these whole cent numbers are the ones that are going to be better support or better resistance levels. So again, we have key support here. It bounced here once, yada, yada, yada. It bounced here again. And the third time it comes to test it, it's able to break down through that. And to me, this is an obvious short. Now, this isn't a super great example because it was still down a lot, on the day, and down a lot from the highs on the day. And it didn't have a super clean breakdown. It didn't go into a massive panic off of that. But I was still able to make some good money shorting the stock when it broke down under that 3-cent area. It still had a nice little sell-off, 0.3 of a cent, from 3 cents all the way down to 2.7 cents. So this is just one of those examples, guys. When I see a breakdown of a key support area that's been holding all day long, or a break past low a day, this is typically a pretty good sign that I want to be shorting the stock. So again, this is very similar to buying the breakout of a key resistance level. When a key support level breaks down, you want to be shorting there. Just like if you were long, say you wanted to give this some wiggle room. You bought it here. Okay, great. You didn't sell into this spike like an idiot. You kept holding. It made a higher low. Okay, it made a higher low. It could never break out past that. It never made past the high day here. It kept making lower highs, lower highs, lower highs. Okay, you're still holding at this point. What level would you cut at? What is the most important level on this chart? And if you zoom out, it's pretty clear that it's this 3-cent hole mark. You don't want to hold long when this breaks. So in the same area where you don't want to hold long is the area where everyone who bought is going to be selling their shares. And that is the point where you want to be short for, because you'll make money when everyone starts selling their shares and the price goes down. And then you can dip buy it to cover, and you'll make the difference there. So that is one of my favorite strategies. I love shorting breakdowns, and I do this all the time, guys. I do this all the time. Now, something key that I want to say is I do not let it go against me. So if I think it's going to break down, here might be a good example. Here might be a good example. So yeah, so let's say right here. So I know this 3-cent area is key support from earlier in the day. Remember earlier in the day, and it comes down and it looks like it may crack. So I'm thinking, all right, I'm getting short, and I short right here. But then it starts bouncing, and instead of being stubborn, I cut my losses. So I make short, at 301, and I'll cut my losses at 305. So I take a paper cut. And this is what I like to call a paper cut, because again, it's not a huge, it doesn't hurt a lot. It's not going to take away all your profits on the day. I would rather take a $20 loss, a $30, a $50 loss here, than hold all the way here and have it continue to squeeze and then break high a day and end up cutting for a $2,000 loss. So if you sell really early, there's no emotion in it. And if you sell really early, it's never like, man, I waited for it to go all the way up here and then I cut and then it came back down. That is also a really horrible feeling. So if you wait to cut, you risk cutting right at the top. So I always like to cut immediately when it moves against me. Now, there's some people who don't trade like that. There's some people who give it a little more wiggle room. And that is perfectly all right as a strategy, but you got to know what is right for you based on the chart. So, in a situation like this, you could short here, into this, I zoomed in too much. You could short here into this spike. Say you think it came up too much. You could short into this spike, risking off of high a day. Because that is a key area that if it breaks high a day, the longs are still in control. The buyers are still in control. So in a situation like this, it's okay to risk off of high a day and not risk on, it just moves up against me at all. That might be a smarter risk there. But, if high a day is, 20% away from what you're currently at, you can't really risk off a high a day. That's too much of a loss if it breaks down there. And you can't take big size risking off a high a day when it's so far away. So keep that in mind, guys. I personally just like cutting as soon as it goes against me. It takes all the emotion out of it and makes it very easy to keep my losses small. And if your losses are small, again, your winners will add up. Now, something else that I want to talk about is the fact that I really like shorting into a bunch of green candles. Because typically speaking, when you get a bunch of green candles, you're going to get a bunch of red candles, or at least a big red candle that follows. And here's a pretty good example, right? So it dips here as low as 166. I actually bought it here. And it goes as high as 192. These are some pretty big green candles, guys. From 166 all the way up to 192. That's 4 green candles in a row. It's, what is that? 166. That's almost 30 cents a share. It's a pretty big jump. It's a pretty big jump. And when I see 3, 4 big green candles in a row, I'm thinking, all right, this thing's going to have some big red candles. I'm going to start shorting it. So that's what I look for. And I know you guys probably have heard of my dip buying strategy, where if you see a bunch of red candles, it's probably a decent dip buy. If from the long side, this is the reverse of that. So a good example of that is INVU. And this one today was nice. You see a bunch of red candles, and then it just gets really overextended to the downside. All right, you probably want a dip buy there. I'm confident taking a dip buy here. And if the same thing happens with green candles, too many green candles in a row, again, that happened on Humble this morning, I'm pretty confident taking a short position. Because I know the higher it goes, the harder it's going to crack and come crashing back down. OZSC is another pretty decent example of this. And this one actually did struggle to break down a ton, but you can see this thing ran a lot right at open. And I started shorting because I know this thing is going to pull back. So when you see a ton of green candles, it's pretty high odds that people are going to take profits and it's going to pull back. So that is the second of my 3 short strategies. When I see too many green candles, I short. Just like from the long side, if you see too many red candles, you dip buy. Except you kind of have more of the momentum on your side in a slow market, because most spikes just fade. Most spikes just die. Here's another good example of when that support cracks. You can see right here. This was kind of key support. It kept bouncing off this area, and when it breaks down under that, it just sells off hard. So that's another good example of breaking that key support. Same thing here, It bounced there twice, but it just absolutely broke down below there on this run. So that's another good example of the first strategy. So those are the 2 main ways that I like to profit from the short side. I like to profit when it breaks down below the key support level, and I like to profit when it spikes too hard and I can short, hoping for a little pullback, a little consolidation in the run. And the great thing about this is, when this happens, guys, you can partial cover. You can take some of your gains into the first red candle. So worst case scenario, if it keeps ripping, you're still profitable in the trade because you sold half. I guess you bought back half here. So now it's past your entry, and you cover the rest, and half your position was break even or a little loss, and half was a decent gain. So that's what I like to do. I always take some gains if it goes my way, because I think it's smart. And in this market that's choppy, there's a lot of pullbacks, and it's hard to time the top perfectly with big size. So that's what I do there. And I guess the last thing I just want to talk about real quick is the fact that you can flip from the long side or the short side. And I do this a lot on Humble. This is a great one to flip just because it's very choppy and there's a lot of really big sellers. So it's pretty obvious where it's going to bounce and where it's not going to bounce. So when it's stuck between 2 walls, ping-ponging, shorting and then covering is the exact same thing as buying and then selling. There's really no difference. You're just selling beforehand. And it's easier, obviously, when the stock is higher on the day versus when it's lower on the day. If it's at near the highest point on the day, it's easier to short it than it is if it's near the low on the day. Because if it's near the low on the day, it's more likely to bounce. And this is just one of those examples of those key supports. So you can see this support held pretty much all day, and this resistance held pretty much all day. So if it had broken down past this key support level, that would have been a great short, and it probably would have panicked down to 160 or 150, something like that. So just a pretty good example of those levels, and I love shorting, man. I love shorting in this type of market, and it's just good to be able to have another strategy, guys. So hopefully you found this helpful. If you did and you made it to the end, please smash the like button. If you have not already, please, I don't know. Drop some type of comment, let me know if you learned anything. If you have any questions about shorting, how I do what I do, let me know in the comment section below, because I try to respond to them all, and your comments really help the channel. So I appreciate you guys. Hopefully you found it helpful. I'll see you in the next one. Until then, you know the drill. Let's grow better together.
Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes.